Hi. When wide usage of AI hit software stocks, it also hit two of my wannabe turnarounds, of which I told you last time. But it also hit stocks of other mainstream software companies. Now, being both greedy and opportunistic, I immediately cleared my desk and took a look at some of the worst hit software stocks. Of course, any search requires criteria. What were mine? As per my book, The Advanced Route Investor, I looked at companies dominant in main market segments with high margins, high return on capital, high growth rate, and of course, also selling cheap. And yes, I also looked for insiders buying, which means that I am not the only one who thinks the stock is cheap. Insiders think so too. The result? About half a dozen stocks emerged, but one stood out as the most attractive. Which one was that? The Trade Desk, TTD symbol. It's a huge company selling digital marketing support and services to customers globally. It's a company I know because it's also a competitor of Illumin, ILM-T, the turnaround stocks I own that declined 50% when AI hit. As I noted, I still hold it because in the past, Illumin provided 10 times stock price in one cycle and 20 times in another cycle. So there's always hope it will deliver something similar in the next product cycle. Will it? We'll see. Now, what about the Trade Desk, TTD? First of all, it is a huge company with sales close to $3 billion, and that's US dollars, and net income almost 400 mil. In other words, it's a very big and very profitable company. Now, what about my criteria? As I said, TTD fits them all. Gross margins are 78%, very juicy. Return on investment capital is 39%, high also, and sales growth is 25%. The sum of the three, which I use as a quality measure as per my book, The Advanced Route Investor, is 142%, which is very high indeed. Now, what about growth rate? Is it coming down following the AI hit? Yes, it does, a little, but not by much. From 25% growth per year, maybe down to 15% by Wall Street estimates, but it's still very respectable. So the quality combination of the three parameters is still very high. Now, how much do we pay for it? The trailing PE is 25, the forward PE with rising income is 20. Both are down from a sky-high PE of 85 at the peak. The PEG ratio, the PE growth ratio, is 1.1, very low for a growth company, and the price to book is 4 times, not low, but software companies usually have very little solid book value. One cheap net measure is high. The EV to EBITDA is high at 13 times, but again, it's a tech company. Still, the ratio of quality to price at 142%, sum of the three parameters divided by the EV to EBITDA, is a hugely attractive one at 10 times. Anything above 2 times is cheap, especially for large companies, and especially when one look in a trough in a cycle. In the case of Meta, which I pointed out at $95 a share before it zoomed 6 times in 2 years, the ratio was 5. Now, what about R&D? As you know, I like to buy R&D cheaply. Here, the sum of the last 3 years of R&D is 1.5 billion, so the EV divided by the sum 3 of R&D is about 6 times, which for a large company is reasonable. Again, in Meta, remember, that ratio was about 5, and I happily paid it because the stock sixtupled. Okay, so TTD is very cheap based on my analysis. But what do insiders think? In other words, what about insider buying? Well, some sold on the way down, but the CEO, Jeffrey Green, who already owned 7.6 million shares, went and bought 6 million shares more for $148 million just 2 months ago, March this year. Yes, $148 million, or 1/7 of a billion. The CEO nearly doubled his holdings using fresh after-tax cash. How is that for a vote of confidence? Now, should you buy too? I didn't say that. I never recommend a stock. I just point out the ones that can serve you as a good sleuthing trading exercise. So at the very least, the above would mean that sleuthing Trade Desk TTD may not be time wasted on your part. Now, how much is the stock trading for? At present, it is $21.81, about $22 a share. How much did Jeff Green pay? He paid 25 bucks, a shade higher than here. And what was the all-time high? It was 141, or 6.5 times the current price. Can it get there again? Which means go up 6 times, just like Meta? I didn't say that. That's for you to find out by sleuthing the company yourself. Did I sleuth it already? I ain't saying. You do your own sleuthing, I'll do mine. But do it how? That's easy. Just buy my books, The Sleuth Investor, The Advanced Sleuth Investor, and see the method in detail. It's all there. If you do it right, it may even help you semi-retire, same as it helped me. That's all for now. Please let me know if you liked this clip, and if you did, give it a like and subscribe to the channel and tell all your friends and subscribers who they subscribe to. And buy my books, The Sleuth Investor, The Advanced Sleuth Investor, and give them a review on Amazon, which I hope will be a good one. I'll see you next time, and meantime, thank you very much for watching.